This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME in Chicago with your grain market update. And it has been a relatively quiet session here as we sit kind of in the middle of the range around 390. Bottom end of that range, 377 to 380. This represents a key Fibonacci retracement, 50-day moving average, as well as the lows from that October 10th USDA report. If we were to see prices drift down towards the bottom end of the range, we think it'd be an excellent buying opportunity. Now on the top side of that range, $4 to 405 is the October 14th highs, a key Fibonacci retracement in the 100 and 200-day moving average. Now I wouldn't be surprised to see us just kind of settle in here and trade within that $3.80 to $4 range over the next several weeks until we get a new fundamental catalyst to break us out or break us down. We are kind of in that time of year where we don't get a whole lot of new news, so still waiting for that catalyst to give us a new direction in the market. Now, as far as the soybeans are concerned, we've had a nice rally here as well, but that November contract really running up against a lot of resistance, 940 to 945 over the last week and a half. It's bumped up, failed at the end of the day, and kind of closed towards the lower end of the range. That's not necessarily a good thing, but potentially the market's found a little bit of an equilibrium as we head into option expiration tomorrow. Again, option expiration, a lot of times some of those big open interest strikes that act as a little bit of a magnet for the market. So potentially we choose through the option expiration tomorrow, and we can see a little bit more activity into next week's trade. Now with November options going off the board, a lot of that volume is going to move out to that January contract. The technicals for January basically in a range, 940 on the bottom side, 960 on the top side. If we were to break out or break down, look for an additional 20 cents in either direction. Now, wrapping things up with the wheat market, wheat failed against resistance earlier in the week and has brought us down to 515 for that December Chicago contract. This is previous resistance, now represents support, as well as the Fibonacci retracement. If we break and close below this 515 level, I wouldn't be surprised to see that open the door for additional selling pressure, take us a little closer to $5 to 503, which is psychologically significant. Also represents the 100 and 200-day moving average. So those are some of the things we're looking at here to wrap up the week. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.